Peter, what do you make of what's happening here? It's the 10-year. It's the 10-year that's doing it. The question is, which way is it going, and what's the Fed going to do about it?
You're right. It's all about yields. And today, it's not just about the 10-year. The rise in rates is now filtering into a rise in shorter-term rates, which the Fed is supposed to control. The Fed, by having the overnight rate at zero and buying $80 billion of treasuries per month with the average maturity about 5 years, we're seeing a spike in the 5-year yield in a large way. The Treasury sold 5-year paper yesterday at 62 basis points. That yield 1 day later is at 80 basis points. So the Fed, because of their uber dovishness, the market is now calling that out. The market is now saying the inflation pressures we're seeing, the vaccines we're seeing that are being highly effective, that your dovishness is just not going to work here, and we're going to shift the interest rate curve with or without you.
Okay, well, if that's the case, what you're effectively saying is that the Fed's losing control here. So if you're Jay Powell and you're watching this right now, what do you do, and frankly, how much do you care, given the priorities that he's made relatively clear even over the last couple of days?
The Fed has two choices. They either fight this, they try to fight the market by maintaining their dovishness and possibly increasing QE or shifting the maturity profile of QE and going further out in the curve to try to contain this, or do they accept this and they start sounding less dovish? I'm not saying that they're going to go shift and say, we're going to raise rates sooner rather than later or taper rather than later, because there's no way they're going to do that. But the Fed is now being put on notice by the market that they need to get that they're in the process of losing control of the bond market. They lose control of the bond market, they lose control of the stock market, and I don't think that's a situation they want to be in. So
Peter,
it will be really interesting to see how Powell responds.
Do you think Powell reads it the way you do? Do you think he's sitting there watching you talking right now saying, I've just lost control of the market?
No. Right now, they're saying, okay, yields are rising because that's a good thing. They're rising for good reason. They're rising because of the vaccine hopes and that we're approaching the spring and things are going to start reopening and blah, blah, blah. So that's how they're viewing it. What I don't think they appreciate is the rapidity of this move. I mean, these are rather sharp increases in a very short period of time. And it's not just in the U.S. This is happening globally. The Australian 10-year yield is up 50 basis points in 2 weeks. That's with the Reserve Bank of Australia doing QE. So the world is tightening monetary policy. And in order to control that rise in longer-term rates, the Fed and other central bankers may have to pivot on what they think about short-term rates and QE. But like I said before, they either are going to fight it or they're going to embrace it and try to control it.
Okay, Peter Boockvar, we're going to leave it there. Thank you for your insight and perspective. We'll see.
Shepard Smith here. Thanks for watching CNBC on YouTube.